What's up, everyone? So today, FedPal increased rates by 75 basis points. Nothing that he said was really bullish, but everything was basically on par with what we already knew he was going to say. Let's just get right into the video. Essentially, the SPY ended up breaking up after the basis point hike, and then towards the end of the day, we broke below this very important support level here at 379.50. We closed below it. So once again, a falling wedge pattern, when it gets broken to the downside, signals very heavy selling. The only way, so essentially now we have a pretty good level that we can trade against, which is this downtrend level. So if you make a trend line from September 1st to September 6th and you connect the lows on these two candles, we basically have a nice level on the daily time frame to have as resistance and support. So clearly right now this should lead to some selling. This closing below like this is very bearish, especially when we have a fake out to the upside, when we had a good opportunity to go long over here on September 19th as well, when it initially looked like we were about to break out. So two sort of fake moves that got people to be bullish, essentially. So what is going to maybe end up happening is we're going to trade along this line here, and then basically this is going to end up leading to a very red September, most likely. But essentially on any of these pops really to any next levels of resistance, you should be grabbing puts for November and basically just come back and look at the market and see what happens in October, to be honest, because there's a lot more room to the downside. But again, what is interesting is that FedPal is going to speak again on Friday. So no matter how bearish this looks, we had a big move intraday to the up and the downside. We can easily rip back up. So say, for example, we're very red tomorrow. We were trading against this level, etc. FedPal could come Friday and pump the market back up. So it's important to keep that in mind. So once again, we broke below this level. We can take a look at the dollar, because the dollar is something that we broke out completely. And this was a big precursor in how much weakness there was going to be in the stock market. But what's interesting is that the 30-year bond is finding a bottom, and it had a big green candle. So is that breakdown of the falling wedge a bear trap? I'm not sure. But usually when we do fall below the falling wedge pattern support level, it's very bearish. But the 30-year bonds, I would have to say that we would need to get above 132, because the strength in the 30-year bonds did not automatically translate into the strength of the stock market, clearly, right? So what I'm expecting is, if the 30-year bonds can break above 132, which is a major level of resistance, that's when a bullish move in the 30-year bonds would translate into a potential bullish move in the stock market, because this small green move did not affect the stock market, obviously. So now all there's left to look at is how much potential room there is to fall. The interesting thing is that 284 is major support on the NASDAQ. So 283.50 to 284 is major support. But in terms of how far away we are from the lower level of the Bollinger Band, we are very far away. So we can continue to fall very aggressively without being overextended to the downside. So essentially, the same way that we were falling like this, we never got extremely overextended to the downside, except that this one day where we opened and closed outside of the lower level. The next day we ended up opening green. For this, we can already see the lower level of the Bollinger Band sharply falling. So to get and to close outside of the lower level of the B band and then open outside of the lower level, we would need to fall so much faster than the B bands are currently falling. And the B bands are currently very sharply falling. So there's a lot more room to go before we become algorithmically overextended to the downside on the NASDAQ, which is very good for bears. So there's that, okay? We could also take a look at the IWM. It would be the same concept. There's a lot more room to the downside. The Bollinger Bands are very sharply falling. And we could also take a look at the SPY. The SPY is the closest to the lower level of the Bollinger Bands. So it has the greatest chance of being overextended to the downside compared to the other two. So if we were to try to catch a bottom, we would do it in either the IWM or in the SP 500. But for now, that's really it. I mean, we have to see what happens on Friday, and then we have to see if the market can continue to fall and break down below this support for tomorrow. So the level of resistance for tomorrow basically coincides perfectly with both of these trend lines here, and that level is basically going to be around 378.75 to 379. So this is going to be a very, very interesting next few days. But so far, obviously, the momentum is clearly bearish. And I cannot stress enough, when you look at a falling wedge pattern on a shorter time frame, if you get a close below, the move to the downside is generally very aggressive on a shorter time frame. This is one of the only times that I've seen this happen on a daily time frame. But usually every single time this happens on a daily time frame that I've seen, we get a lot more room to the downside. So it's going to be very interesting to see what happens moving forward. Thursday and Friday are going to be very interesting. But I hope you guys enjoyed today's live stream. I hope you guys enjoyed today's video. Make sure to like, comment, subscribe, do all that good stuff, and I'll see you guys tomorrow. Thank you.